start with record. Hi, everybody. August 24th, 2022. This is Steve Hodgden, and with Modern Asset Management. And tonight we're going to talk about joint venture financing and other types of ways money's moved around in the real estate space. So I'm going to start with. I'm going to run through stuff, and what I hope we get is some dialogue and questions. So let's do a slideshow since I, again, made this lovely slideshow. We ought to start. Let's see, get group out of the way. Nick, you had a lot to do with this because we're going to touch on the deal at 35% a little bit, so you'll see your work show up here. So when you're financing real estate transactions, time is money, and you really should know your numbers. And oh, look at that, cute. It little, oh, I didn't know it did that. That's great. Okay, how the heck do I get past this? Oh, there we go. Before I start, this will be heard by a lot of folks that are land investors, or people that are wholesalers. And this is on the left-hand side. So there's a letter, an offer letter, and the tax bill. This is a smart investor, wholesaler. He mailed tax notices, arrived last week, beginning of this week, for Escambia County, Florida. And in my PO box at the same time as one of those invoices was a letter offering to buy the house. So here I am, I get a tax bill, and I'm like, I have to pay the taxes again. The next envelope I open is an offer to solve that problem. I thought the timing was just really beautiful. It showed, and one of the things, having mailed a lot of letters in a lot of different ways over the years, the date of the letter is July 26th, but it didn't hit the mailbox until 3 weeks later. So that's the cost of sending things second class. Doing bulk mail is you have to really have your timing down, and these folks really did. What they did wrong is when I responded that I was interested in selling, I filled out the form on their website. I got an email back that said, "Thank you, your offer request has been successfully submitted. You should be expecting a written offer from us in the mail 7 to 10 business days from now."
Oof.
Okay, Greg. So it's so, how good are the French fries when they come right out of the fryer at McDonald's, and how good are they when they've been sitting in the car for 10 days? Right? They're inedible. I'm not going to be interested in this offer in a week because I'm going to be on to other stuff. I will have already paid this tax bill. Anyway, it's had its good and its bad. Just a little terminology that you'll hear all the time, and again, I'm speaking to the larger group, not to us specifically here. Joint ventures, there's a money partner and there's an operator. Equity is the skin in the game, and that actually protects you. So how much money are you putting in? And we are often the equity partner. So we will buy the property at a wholesale price point, and that is our protection, in that we believe that we should at least be able to get what we paid for it. That is not always the case, but this is, well, I'll keep going. Your other choice, if you're not going to want to give up equity or a percentage of the property, is to take on debt and be personally responsible. And there are points when too much is too much, and I'll probably touch on that for a minute. Nick, who's here, teaches me every day, at least maybe not every day, but at least once a month about internal rate of return and how time kills profit. We are in the business of buying discounted notes. And so when I go and apply my basic back of the napkin kind of rules, sometimes I miss. Nick, who has Excel, will tell me how much I've missed by, and as we get better at it, maybe I'll ask first, right? We talked to lots of people in the land investing world, and I think that's a misnomer. I think we are land speculators. We are buying things, houses and land and infill lots without having a ready buyer in hand. So we are betting that our purchase price is enough below the market value that we're going to make a profit. So investing is spending time and money now, putting it away in something that's going to appreciate or pay down, as a note will do, to get more time later. So you're going to put in your time and your money now, and the hope is that the freedom and the time you get later is greater than the time and money you put in at the beginning. Other words thrown around in the space are hard money and private money. There's lots of hard money lenders, and there's a fair amount of private money around. Hard money lenders roughly charge 4 points and 12%. So if you borrowed $100,000, you'd pay $4,000 up front. So you would only get $96,000, and you would pay $1,000 a month interest on that. Private money will be cheaper. It won't have as many points or no points at all. It's also coined as lazy money. It's coming from people that are not actively real estate investors, but people are just looking to get something better than the 1/10 of a point that they get in their savings account. Lots of IRA money floats around in this space. Investment to value is what you spent divided by the real net value, not the Zillow value, right? The real net value. Loan to value, when they use ARV, after repair value is a phrase that was something that has been created not that many years ago, and it's become the standard where we're betting on the future value, and that's what we're financing. And there's lenders out there, hard money lenders out there, that'll lend 85 or 90% of aftermarket repair value. Well, I was going to say that's tough to do, but we have lots of transactions where we're lending 100% of the original purchase of at the wholesale price. An example like this, if you have a deal that goes from beginning to end, you put $131,000 out, you sell some properties along the way, you get everything done, you get this down to partners, and if you hit a home run, you can make $44,000. Okay. So I should have stuck on that slide a little longer. That's a cash transaction. We're drumming into my head that cash sales are good sales, but we also participate in some groups that sell everything on terms. So it's, do you want money forever, or do you want it now? You're going to get less now than you will if you wait forever. Well, forever meaning 5 years. Here's an example, and we're not going to dive too deep into this, but we paid $28,400 for a property, and it took 7 months to sell. So when you have a planned internal rate of return, you need to add at very least 2 months, for a month for the buy and a month for the disposition. In this case, it's languished on market for a fair amount of time. We all read the news. We know that sales in single family home have cratered, that interest rates have doubled, and all this stuff. And property's going to sit. here where I am, often properties sold before the for sale sign got put up a year ago. Now those signs are sitting up for several months in a very attractive market. The thing about selling on terms is it takes a long time to get your money back. And here we are at 34 months. This chart goes on longer. 34 months, still negative. Still haven't gotten our cash back. One of the things I hear a lot about this, I'm going to be done here quick. One of the things I hear a lot, and we were in a seminar, Greg and I, weekend before last, where they talk about selling at zero interest and selling for 6-year terms on a fully amortizing note. So we have a transaction that we sold on terms for $14,997. We collected a $2,000 down payment, I think. Yeah, I think it was maybe $5,000. I think we collected $5,000. We collected a $5,000 down payment, and $14,997 was divided over 6 years. So we did not charge zero interest, but in this case, the zero interest loan would pay $208.29 a month. If you did a simple thing like add a 10% interest coupon, the payment jumps to $277, which is still doable for the borrower, and it gives you of many things, income. It also keeps your buyer engaged in that you can always come back and offer a discount. You've been paying me for a year, sir, can you go to $500 if I cut your interest rate in half? They often can. Or would you like a zero cash out amount? Okay. Also, the value of that note will be worth more in the market to a secondary note buyer who has who's chasing yield. I also then looked at that $14,000 note, and you would have to probably season it, collect some payments. But in this case, selling the whole loan right away to somebody who was discerning and wanted to buy it for half. I negotiated with myself and sold it for 55%. So you could sell that payment stream of $277 and get $8,000 cash today. Back to being an investment, putting out some time and money now to get freedom of time, just collecting payments, and more money over the years. So this is a typical transaction in the secondary note market. How do you get more money? How do you do that? You have a loan on a good single family home that has good resale value. You can get 18% discount for those pretty commonly. We've done 17. We did a bunch at about a 17% discount where we were the purchaser. With good underwriting. Many land transactions have no credit check, no bank check, no proof of income, no down payment, $99 down, $99 a month. And those go bad at a rate that you have to discount for the losses that are going to come with that. There's also a firm requirement if you're selling owner occupied that you have to sell, that the borrower has to prove that they can pay for the house. So you're at $15,000 note is really worth $8,000 in the public market. The Texas HP 10B2 calculator will give you this lovely amortization table, and this is back to how long does it take to get the $8,000 back if you purchase this 72-month loan. So if we purchased at 55% of, I put terminal, that's not right, of present value, it'll take you 30 months before you make any money. I have been remiss in my career way too often to not consider that. I'm always more concerned with the sale and less concerned about when I get my money back. But 2.5 years is a long time to wait to get some money back. But at that point, you still have 42 payments. But this doesn't factor in the inflation that we're seeing now and the inflation that we always see. So every year, your money is worth 3 to 10% plus less than it was the year before. So that payment dwindles. And that's the end of the quickie slideshow. What I'm hoping for is that was a quick high-level run-through, and we can get some exchange information. I have to go stop my share. Oh, Dave Putz is here. We can just give Dave Putz the next half hour.
How you doing, man? How you been?
I'm good. Those of you that don't know, Dave Putz runs JKP Holdings in New Jersey. He is a very active note trader and investor. And how about a little market update? What do you think? What you think that $15,000 note would sell on your platform? And was I close? And what sort of other things would you need?
Yeah, no problem, man. It's interesting you say that. For those who, I just jumped in at Father's work. We're going away tomorrow. I've been telling Steve I'm going to jump on 1 week. What most people don't understand is they don't know these numbers, right? And understanding these numbers makes this all different. People are not bidding on true numbers a lot. They're bidding on fake numbers, and they're getting themselves in bad positions. I just sold a note at a 6.5% yield. And for those who don't know, I don't know anyone wants a 6.5% return, but that person bid on percentage of UPB, and that's not. I always ask, well, what at the end of the day, what was that bid on? And they told me it was bought on, based on the UPB, and I just shake my head like doesn't make sense. So I think if you ask a right person who does the financial calculations like we do, you're looking at the fact that you're going to buy things based on the return you're looking for, based on the collateral, like you said, based on the numbers, and if it performs. It all depends, right? We bought partials at 11.5. We've bought partials at 12. We bought whole notes at 9.5. Stuff like that. So I think that's a huge part of what most people miss on is this idea that these numbers, as confusing as they may be, mean everything in our business, from creating to buying to selling, and you will be a step above anyone else if they don't know this stuff.
So if you're gonna get a note, say in shape to be sold in your marketplace,
Yeah.
what are the things you teach your folks or advise people to do? Because we're talking to this will go out to a universe of people that are doing no underwriting at all.
So as you quickly pointed out before, is that you're creating paper that could cause problems down the road. May never cause problems, but if you don't do the right underwriting, you are causing yourself and whoever buys it a world of trouble. Because the fact that that borrower can test anything, or if you're in bankruptcy court, or if you're in foreclosure court, they have something that they come back and argue on, and you don't want to be in that position. Borrowers argue about enough. Yeah, good underwriting is the key, right? And knowing your numbers is the second key. So underwriting is such a big deal. It's just unbelievable. And understanding if you're going to create a note, you need to know what's sellable, what's something that people will buy.
Mm-hmm.
How many times you see a note underwritten for 6%, and you're like, why'd you do that to yourself? Like, you send them to a bank, they can get 6% at the bank. Get them up to the 8-9 number. You have to, because you can't sell a note, the 6% note. We were talking today on a phone call. Same idea, right? You can't sell a 6% note to someone who wants 11%.
Right, without bringing it all the way down to what market value is. The seasoning is one of the things that I hear, that we hear a lot. I've been seeing more people like us buying with no seasoning at all.
Yeah.
And we discount appropriately.
Yes.
Down payment to us is key. We're doing all non-owner occupied right now.
Okay,
Right?
cool.
Because and we're also doing a lot of land contract purchasing where
Oh,
where
yeah.
we don't have to go through the foreclosure. We can just
Yep.
go through a repossession.
Yeah.
But
Yeah.
we don't want to do that. I don't want to be in the loan to own business. I don't want to be spinning. I don't want to be turning over the same product. If we're going to do that, we're going to go sell used cars. You know,
Yeah, I hear you. Right. We'll have our criteria of what works for us. And for ooh,
that's
I
a
lost Brown
large
for a
cat.
second. I think we have Brown out for a second. For us, one of the key things for us is value of property. I don't want to be in a spot where my property value underneath the note is worth 25,000. I can't buy that kind of asset. Because if I do have to take it back or evict or foreclose, I'm in a property where I don't have a lot of margin room, right? But that's for me. I don't buy a lot of CFDs, but I have owned a bunch of them that are worth, 80, 70, $80,000, but I won't buy a $30,000 CFD. It ain't because of the numbers. It's just because if I do have to take it back because the borrower defaulted, I got a $30,000 property, which I may have to fix up to sell. I don't got a lot of room.
All right. Well, before we move on before we move on to other stuff, so Greg, we have this note, the Pima County 17 acres.
Let's say which note.
The
Yeah,
the
I know what you're talking
25,000
about.
down. Yeah, so that one. Yeah. So
What about it?
well, what were those terms?
Oh, the balloon. Yeah,
Yeah.
the party balloon.
Yeah.
Yeah, we throw a party in 12 months. Right?
Well, we gave her a little longer than that, but we had a property at 17 acres outside of Tucson, and we sold it to a nurse and retiring psychologist
Cool.
from the great state of Maryland, and they are planning on that's going to be where they're going to spend their end time, their days.
Nice.
And so we wrote an even $100,000 note. They put a $25,000 down payment down. Credit score was lower than I thought. It was 620, but it was it was explainable. She had run up a bunch of new credit, and she had some really old Duroc. She had a if she ran if she had waited 2 months, her report would have been 670 because one collection account would have fallen off, the last one, but she had some prior history. So we were $100,000 note at 8% interest, interest only with a balloon in 5 years.
Oh, okay.
Right? Oh no, I wrote it amortizing.
Okay.
So $100,000, 5 years from now, it's 95,000. So we're collecting interest. We wrote a 30-year balloon. So the market, we know, balloons often pop and they don't get paid. But again, given the history, the story, and what they're planning to use it for, I'm keeping it. I might sell it to Nick. I think Nick wants to buy this note because Nick will get a really good discount on it. Nick's my partner, if you don't know Dave.
I don't know that. Yeah. So within she said,
I don't know this note.
You don't know this note. That's right.
You guys use a calculator where I use a spreadsheet, right?
Yeah.
And for me, I can run that formula down an entire list of 50 assets in a matter of seconds, right? Where I can put in I want an 11% return on any of these assets, run a formula down an entire spreadsheet and say, here's my PV on every single asset in a matter of maybe a second and a half. And it's a straight formula down the list. And that's how I run things a lot, where if I see a list performer and I just need quick numbers, you say, Dave, here's 15 performers. I have a formula, boop, done. And it literally shows over. But I need to know what the balloon is. I need to know how many payments are left, right? I can calculate that stuff with MPER, and I use spreadsheet formulas because a lot of times, unless you're looking at one asset, the calculator works great. But if you're running 10 assets, you want to know numbers on each one of them in a matter of seconds. And that's what I use, right? So I use a spreadsheet to figure that kind of stuff out. But most people don't know is you need to have those numbers, right? If I don't know what the balloon number is, I can't figure out these numbers. These all intertwine with each other. It's amazing how that math people don't get, and that's crucial for the space. My partner, he's financial guy, Wall Street guy, and he taught me that back 2015 when we really dove into numbers. He says you need to understand this stuff, and I spent time learning it. What does PV mean, right? A lot of people will think it's only the unpaid balance. Well, it's also your purchase price. It could be, right? But people don't understand how and where the numbers work. But yeah, I love it. I mean, those who are interested in stuff, you really could, quote unquote, trick people when you buy notes by running these numbers, right? The whole half the note for half the payments, and I'll buy it for half and not realize the fact you're getting a 32% return because it sounds pretty. So yeah.
So here's an example of, we'll run a, Nick will run an XIRR. We're accounting for downtime and taking out payments, and then we're looking for break-even points, and when we get return of capital, and then what's remaining, and so.
Yeah, we use net present value on the flip side to buy it, right? So I set my IRR return, and I say, okay, if I want 11% IRR, what's my net present value set based on a number? And I say, okay, I'm going to sell it in 2 years. What's my net present value if I want to hold it for this much and sell it, and then go from there? But yeah, I mean, we do it all the time. I mean, that's how we bid on things. That's your return. You have your IRR schedule. What I was able to do is with partials is you have your schedules A, B, and C. We were able to create it so it was all one sheet where I can look at the A, B, and C chart and say, okay, Schedule A, Schedule B, and Schedule C, separate or whatever. But for me, that's crucial when I want to sell partial, even buy a partial, and say, okay, where am I at in the schedule? But it's cool stuff. I mean, it's interesting that you're teaching us stuff that I like to see more people ask questions, because it takes a long time to understand what these numbers mean, how they apply, and what do they do. But giving examples is a good way. I like to hear, people ask questions about this stuff, because it's not easy. And anyone that looks at it and hears you talk, which you do a great job telling, they don't realize how it isn't that easy for a lot of people. So if people have questions, feel free to ask. It's great numbers, great information, and many people don't get it. So yeah, on our platform, we sell these kind of things all the time. Like I said, I sold a partial. We sold a partial just last week at 7.75. Why someone's buying a partial at 7.75 beyond me, but they liked it. We bought a partial 2 months ago it was a 12-year, 11.5%. That's fine. I'll buy it all day long. It'll perform for a long time, and we'll make money moving. And right now, the way things are, it's tough to buy the high yield stuff. You can get them, but you're going to be smaller loans. We want the bigger loans.
So has the bump in the traditional market interest rates then have rippled through the bond funds and and other not so alternative assets as this? Have it pushed your prices? Has it pushed the market up or down, or are people still looking for a fairly safe 10, 11, 12?
I think it's the fact that people want to get their money moving, and they're starting to drop their yield number down to a number where they're actually getting their money moving, right? We have cash flow coming in, and we need to move that money over. If I can't buy it 20 yield, I got to drop it down to a point where it does work. So I think that's more driving the market downwards versus the outside parameters. So I have $300,000 to spend, and I have it sitting there for 6 months. I got to find some money into. So if I'm not getting the yield I want, I'm going to drop it down to get the money to work. I think that is driving the market more than anything else. People just desperate to get into a deal or desperate to get money moving.
People scared out of the stock market.
Yeah. Oh yeah. We was an accredited investor there last Thursday, and you can see people with hundreds and millions of dollars sitting there going, what do you guys got to go there? Because I'm not going to go in the market. I don't know what's going on over there. Let them figure the stuff out. And then, you know, one guy over there just sold a pharmaceutical company with 15 mil. He's like, why am I going to put in the stock market? Who the hell knows what's going to be there in 6 months? What do you guys got going on real estate? Like, no real estate will always be there.
Well, and that's been, you know, one of our driving parts is our core business is unsecured small dollar lending, and we've been looking to improve the balance sheet by actually having some hard assets underneath, and we started working in the car paper side, and then I continue to pursue the real estate stuff, and you know, it turns out that there's appetite. What I have, if we're going to make this a Dave and Steve meeting, you know, I think there's a play for partials. I think there's a play for smaller dollar beginner folks if they're in the right group, and you're that right group. There's other bigger players out there that are selling stuff above retail, that aren't gonna take the time to have you really dive in and know when your return of capital comes, you know, because you
gotta know what your why is, right? It's sometimes not about the numbers, your return, what you're getting into. What are your goals? Like, is your goal to retire in 5 years and you're only 25? All right. Is your goal to move stuff into a different platform in 6 months? I had someone go, well, is there a way I can make, you know, $10,000 a month passively in 6 months? Why would 20 guys start off? 100 grand? No. Like, you know,
couple million.
Yeah, right. You've got to have the right platform, right mindset, right goal setting. And without that, you're not going to do right. So I think for me, understanding their wants, like I have Robin, one of our Robins in our mastermind, and her goal is to be in a position where she can retire and be happy, but also grow little kind of people that can do work for her, right? So she's actually working on systems. That's her goal. It's not, she's already getting 10 grand passively. Well, she wants systems in place. So understand the person's goals. I can sell you a note, but if it doesn't align with what you're doing, you're going to hate me later, right? We all want win-win situations, right? Non-performing note is what it is. It's kind of nasty, and you never know. But yeah, partials is a great way for those people who may be new to understand what they're doing and get into something with a handheld, right? It's kind of a holding your hand because due diligence is already done. If it goes bad, you got a good situation. But I encourage people to buy a performing note too. I mean, it's a great opportunity to get into something. I don't know how new the other ones are here. I see John here too, but you know, it's a great opportunity to get involved with people. But it starts with the numbers. I think Steve, walked into it, seeing you run the calculator, and I'm like, thank God, right? Because people just don't see it enough, and they don't understand it. It's overwhelming. So, but yeah, I do spreadsheet formulas because I can do it on the fly. I'll be more comfortable with the calculator.
Well, and then you built a great set of tools.
Yeah.
And so that's we've been using some other stuff, but for me, if it goes beyond the calculator, it's got to go to Nick because that's me. So let's open up for a little bit. We're 20 minutes from wrap up, and so maybe part of the conversation turns to I don't know. Let's somebody else.
Please
start us off on
here hanging out. I'm on vacation tomorrow, so
good for you.
We'll be driving tomorrow, all day tomorrow. So yeah, please, let's hear some questions, any concerns, any curiosity. I'm always looking forward to learning from others.
Dave, in the marketplace, if there's somebody listening to this at some other point later in time that has some notes, which be very likely that's the audience this will go to, and they wanted to sell their notes, what kind of yield for what kind of notes are you kind of seeing out in the marketplace right now on average, just ballpark speaking?
I'm seeing, first position selling between 10 and 11 and a half. We've seen this, the spread down to like 6, which is crazy, but most people are going for that first position between 10, 11 and a half. Seconds are going between 11 and say maybe 12 and a half, where CFD is a little bit higher than that. I don't see 15s anywhere in my marketplace on average. I have seen them. They're not, you can, if you can get fancy math, you can get them done, which we've done. But I'm seeing that, I've seen first get down to 9, and I'm going to think that's going to eventually happen. I think you're going to see commonly we're not first or between 9 to 10 and a half.
So, and you're talking clean
Clean paper.
performing, clean paper,
Clean
good
performing with
performing,
history, with all
not
that stuff.
not reperforming, not loan mods. So.
Oh, thank you. My son dreaming ice cream. Yeah, I think it's clean paper. Even bonds are going to sell a little bit higher, but not a lot, because the marketplace, you're not going to get 15s unless you can really play with numbers, right? It's hard to get a 15 unless that note, we have a note we own, the 14% interest rate loan. Well, guess what? It's easy to buy that at 15, right? Because the discount is little. And those people don't understand the discount, understand that interest rate tells me how much room I have. You can buy a 14% interest rate loan at 15 yield all day long and make it easy. Try doing that with a 6% loan, ain't gonna work. But yeah, so Nick, to answer that question, I think that's the range I'm seeing. But again, I was shocked to see, let me see what we got. I mean, my platform for selling notes, to be honest with you guys, wasn't set up to be an exchange. It was really meant to network. That was my goal of it, right? To reach out, meet people, talk people, get people in an email and network with people. That was the ultimate plan with it. And hey, listen, if I can buy and sell an asset on it and see assets earlier than anyone else, it's a golden plus for me. But yeah, I'm more in the automation tools, network systems, due diligence automation stuff for my part, with my financial guy being my silent partner, that kind of stuff. So hope that answered your question about.
I'm gonna put up something to see if we can get to a real
Yeah.
example. So this is my $100,000 note. She's made 2 payments. Balance is down to $99,000. How many more months of seasoning do you want to see before it's attractive?
So we've gone between that 3 to 6 months. And to me, what we did in our model was based on state. So if this is a Texas note, I'm
This
going to
is
be
Arizona.
I'm going to be a little more convenient than if I'm in Jersey, or if I'm in PA, or if I'm in a little bit more difficult state.
Okay.
I'm going to want that 6 months. But if in PA, if I'm in Texas or Arizona, an easier state, then I'm not going to care so much.
Okay. Well, let's take 6 months. So it's
Yeah.
6 months. I've got a present value of $99,000.
Sure.
And if I'm going to sell, say, 36 months of this, what should the what would you want? What would you expect the coupon to be?
So I'm running by formulas as I speak. I'm looking at if we're buying 36 months,
Mhm.
I'm gonna probably set that thing at given what I'm seeing now, probably around 11.25. So I'm getting a 22,310, 76 on my
Mhm.
spreadsheet.
Yep.
Yeah, close enough, right?
So
okay.
So I'll talk to the group for a second. Here's a chance where I could harvest $22,000 out of this note right now to go buy another piece of property. And the levers that you're pulling here are I can let my cash ride at $733 a month. That's lovely and it's wonderful. Unless I can take that 22,000 and turn it into 32,000. Right. And if I can go do another flip with that money, or with that and some other money, then this makes sense to me. Why would I sell something for a higher number than what I'm getting on it? But if I put back, well, let's see, how do I do this? What do I have at the end of it? If I go,
Sure.
I put it back the way it was. So I get $22,000 now. Back to my 100. And I get this note back. I've got 6 payments
Mm-hmm.
plus the 36 I gave away. So I'm 42 months in. And I still have $96,000.
Yeah.
Right. So I got 22,000 and 96. So I'm getting into that. Okay, that might be worthwhile.
Hey, it's funny you say this, right? We were looking at a note the other day. Someone said, listen, I'm looking at sell, and they didn't understand the math, the 9.9 coupon, and someone wanted to buy it at 8% return. They wanted to buy 12 months, the new rookie person.
Mm-hmm.
And I says, you didn't say no, did you? And they said, well, we weren't sure how to handle it. So do you realize
Yeah, you say
if you
yes.
hold the note for 12 months, you're gonna get less money than them paying you for the 8% for the 12 months. They're gonna pay you more money for
Mm-hmm.
those 12 months than you're gonna collect.
Mm-hmm. Yeah,
And
and
they
you get
didn't
it now.
understand that.
Right.
They
Right.
didn't understand that. So those back to this number thing, right? You're gonna get 8%, they're gonna get 8% on their investment. You're currently getting 9.9 on your investment. You're obviously gonna get a higher return.
Mm-hmm. Right.
So yeah, it's nuts, yeah.
Right.
So
this is for me, if I'm running an active trading business in notes or houses or whatever, we all have a limited amount of money.
Yep.
This is a way where I can have my cake and eat it too.
absolutely.
Right. I can build a better future of time and money by investing some of this money now. Here's 3 years. I'll take it back after that. And so this is, and again, so we come across, we're talking to a lot of people that are building note portfolios on land.
Hmm.
And it is a thriving marketplace. Everybody wants to get away from it all. One of the realty companies we use, Whitetail Property, their slogan is "Own your own middle of nowhere." Right, and it's exactly right. You want 40 acres in Pennsylvania to go
Yeah.
bow hunting. I know where to get it.
That's awesome.
Yeah, and at at $299 a month. Right, how can you say no?
Yeah.
Right?
If that's what you're looking for, you can slam dunk it all the time. That's awesome.
Yeah. So
What are you typically looking at? What are you guys seeing in your side of the market? I'll be speaking noteworthy next month, whatever, but I'm always curious what everyone else is seeing. What are you guys? It's weird because I'm not on that origination side much, right? We don't do a lot of that stuff because of where we're at. In New Jersey, we don't do much of that stuff. Most stuff is high enough price where people are getting it. And the only time it's self-originating is really for investors. So what do you guys see in the marketplace? How are people always doing stuff? And are you guys wrapping in like servicing fees inside your notes often?
Yeah. So typically a $15 or $17 note fee
Mhm.
for processing, which kind of covers costs, really, because a payment gets touched by so many hands, no matter how much automation we have.
Absolutely.
You got to balance the bank statement, you got to produce the report, on and on. So that's really just covers operational expense. The qualified buyer has much better opportunity than what I can offer. They just do. So my buyer tends to be dented somehow, dented credit, not stable income, lower income.
Yeah.
And we try to fix that with larger down payments and a reasonably above market interest rate that encourages early payoff.
Of course.
So we'll sell a half-acre lot. Glow Flight is here, which should be renamed Lolly, by the way. We've financed not for Glow Flight, but for other entities in Pensacola, where we've bought the lot for the builder and have put a typical hard money interest rate on it and sit in second position while the house is getting built.
Sure.
It's I have a story that I've told too many times in these YouTube videos, where we got really upside down in the deal. So I'm not building mansions anymore. I'm building single family affordable housing. That's where I'm staying. And but it can take 6 months. It takes 6 months to get paid back.
We did a webinar with a gentleman who did a similar thing, and with his methodology, which I thought was awesome, he was working with real estate agents. And whenever somebody who couldn't qualify for a mortgage, he would pay them for a lead. He then would take the person, get them qualified, right? And then send them back to the agent and say, okay, now they're qualified, go get the house. And it was pre-qualifying borrowers who wanted a house and getting leads from real estate agents who wanted the business. He got them qualified and sent them back, which is awesome mindset. If you get that, you're solving a problem, but it all goes back to understanding numbers, right? It goes back to, I'm running a workshop. I'm doing this stuff too. Like, people need to learn it. But if you're originating in seller financing world, are you guys originating through RMLOs? Are you using Call the Underwriter? How are you guys originating usually?
Here's the underwriting department.
Gotcha. Nice.
40 coming up on 43 years in credit and collection. Awesome. And Nick has led the team to build a very robust underwriting platform, which produces month in, month out, spot on, entirely based in the subprime world.
Wow, I like that.
Yeah.
I like system.
Yeah. So, and it's a big machine. Yeah. Takes a lot to feed it every month, but it's
I'm sure. On the due diligence side, we're automating all of our due diligence data and our ROE agents and stuff like that, and we're feeding that constantly new data points. We're pulling data from multiple feeds in, and then we have I think now it's 11,000 REO agents, and that process for us took a long time just to get things going. And it helps us speedy things. But on the underwriter side, it's a mystery world because we're not doing a lot of that at all. I didn't come from that world. I came from the hedge fund world. So it's a little different angle.
We pull our normal stuff. We pull online bank statements. You give us shielded access. We run it through a model. We only get the data. We don't get, we don't know what your bank sign on is. But we know what your bank patterns are. We know what NSFs. Are you a steady bill payer? And there's all kinds of things in bank statements that that prove credit worthiness. If you oh, look, the cat's in the picture. There we are.
Famous now.
Yeah. The key is affordability. Do they have enough money to make the payment? And do they have enough money? It's not that they make $10,000 a month if they're a commissioned real estate agent, 10,000, 20, 30, 40, they have these giant months. It's the person who takes home $4,000 a month every single month, services their car note, keeps their credit cards to less than 70% of limit, and who has a and there's a volume control on bank accounts. If they're showing you a bank account with no activity, well, that's the bank account they show to lenders. So you're looking for a few debit card transactions, not 17 a day. Got one of those. It's 17 ATM transactions a day, right? You do that, you're not going to be able to sustain, and you're going to collapse. So we look for boring, and if you're not boring, then the discount goes up.
Yeah, you have to. You're risky.
Yeah,
you don't know what's going to happen month to month. Yeah. I get it totally. And that's a system I'm sure it takes a while to create because you got to understand all that, right?
Yeah.
And you
Well,
get, dude, people.
and we're
like-
constantly every month we measure and we come back and verify. Is
Yeah,
are the rules still true?
Hmm.
There's 16 rules on the bank side, 33 rules on the credit reporting side. But really it only comes down to like the core 4 things that we all know. It's
Yep.
it's income, derog, it's simple,
Yeah,
So,
yeah.
anyway.
It's vanilla, but the vanilla has to be solid.
Yeah. So-
Consistent. So
we're
cool.
coming up on, I really appreciate you coming in. We're coming up on
No
quitting
problem. I
time.
appreciate you jumping on. I always like to get on these things to say hello and
Yeah.
know.
No, it's good to see you. No, so we're not going to Noteworthy.
Yeah.
But we'll see. Yeah, we'll see you Paper Source and
Yeah.
other places. And so
always been around.
yeah.
Yeah. If you want any more, I can jump in here. I will definitely do that.
Okay.
Time permitting.
All right, good. I know it's late for you, so all right. Okay. Any closing questions? All right. Glad we bored everybody again. Have a good evening, and maybe next time we'll talk about joint ventures and things like that. All right. Okay. All right.
Woo!
All right. See you guys. All right. Bye-bye.
Molly's
Thank you.
out.
Bye, Lolly.
Bye.
See you, Nick.